Before it was just a rumor, now it's official. Another store bites the dust, and another one down, and another one down. Another store bites the dust. You know, Weird Al was the bus. Weird Al, one of his first debuts on TV, which was like in the 70s, I think, when he did this. He did one called Another One Rides the Bus. It was pretty bad. Like, you'll see it, and then it's like, that does not seem like did I say Al Gore? I hope I didn't just say Al Gore. Weird Al. Talking about Weird Al. Weird Al. Another One Rides the Bus. Funny lines to it, but it was just the way he sang it was just bad. But then, of course, you know, all the other videos and songs he's done have been fantastic. Toys R Us, Wolf Street. Toys R Us melts down, files for bankruptcy, and bonds collapse. Another retail owned by private equity firms goes bust. And another one owned, and another one owned. Another one owned by private equity firms goes bust. Toys R Us filed for Chapter 11 bankruptcy late Monday in the U.S. Bankruptcy Court in Richmond, Virginia. The bonds of the largest toy retail chain in the U.S. have gotten crushed, as cryptos, of course, are returning up higher very nicely after being slaughtered just a few days ago. As word was spreading that it was preparing to file for bankruptcy, Standard & Poor's rates the bonds a merciful CCC minus, triple C minus. This is deep into junk, but still 2 notches above D for default. The $200 million issue of senior unsecured notes due in October 2018 with a coupon of 7.375% had plunged to 46 cents on the dollar on Friday from 65 on Thursday. Today they dropped below 21 cents on the dollar before the bankruptcy filing. They have now plunged 78% since September 4th, when they were still trading at 97 cents on the dollar. The plunge of those notes began in earnest on September 6th, when it became known that the company had hired law firm Kirkland & Ellis, whose bankruptcy and restructuring practice is considered a leader in the industry. That, of course, was the sign. At the time, sources familiar with the situation said that bankruptcy was one of the options, and all heck broke loose for those bonds. Toys R Us has $5.2 billion in long-term debt, according to its latest quarterly report, and sports a negative equity of $1.3 billion. Quarterly sales declined 4.8% year over year to $2.2 billion. Same-store sales dropped 4.1%, and the net loss jumped to $164 million. Listen, when you go into Toys R Us, and I've been there once or twice, trust me, I've got kids, it's not exactly cheap. You can go online and find stuff cheaper. Amazon even deliver it right to your house. Sometimes it's fairly priced, pretty close, or the same. At the end of the day, the point I'm making right now, it's a flipping toy store. How the hell does a flipping toy store, I know there's many branches, whatever, have $5.2 billion in long-term debt? It's a flipping toy store. You buy cheap toys from China with the name brands made by Mattel, and you sell them for a lot more money. How do you accumulate this? Because of these, I'm going to use the exact term. Another retailer owned by private equity firms. It's the private equity firms who put them into this massive amount of debt. I'm telling you, this is a strategy. We're going to put these companies in massive amount of debt. We'll file for Chapter 11 to clean off the debt, and then we'll be a very profitable company afterwards. Or so goes the theory. I don't know how much they took into account of the falling wages in America that Americans have, the massively reduced disposable income Americans have. So I do want to wish them luck with that restructuring. Quarterly sales declined 4.8% year over year to $2.2 billion. Same-store sales dropped 4.1%, and the net loss jumped to $164 million. Under attack from Amazon, Walmart, and other online and brick-and-mortar competitors, sales of Toys R Us in the quarter were down 15% from the same quarter in 2012. Yet toy industry sales have been growing by around 5% a year over the period. With these debt levels, how much actual flexibility do you have in this environment? Charles O'Shea, who covers Toys R Us for Moody's, told Bloomberg, you have to invest online because your principal competitors are really good. And you've got to deal with the debt load and your maturities on top of that. The pie is only so big. About $400 million of its debt comes due in 2018, including the above-mentioned notes that have collapsed. In 2019, $2.6 billion in debt comes due. In 2020, another $1.36 billion will mature, and Toys R Us doesn't have the means to redeem this debt, and the possibility of new debt to pay off old debt has dried up. So it needs to restructure its debts, and creditors are going to get their heads handed to them, and a bankruptcy filing is now the chosen mechanism by which to do this. As if we all, of course, didn't know that, right? On September 14th, Bloomberg reported that, according to people with knowledge of the matter, some vendors, fearing getting caught up in a bankruptcy and facing soaring costs to ensure their receivables from Toys R Us, are curtailing their shipments to the company. This is terrible timing, just before the holidays when Toys R Us makes about 40% of its annual sales, and when it desperately needs the merchandise to make those sales. Vendors rank low on the totem pole of creditors during bankruptcy proceedings and have often little chance of getting repaid. This scares vendors, but when vendors get scared and pull back, it seals the merchant's fate, since it won't have the merchandise it needs to sell in order to stay alive. On September 7th, DebtWire reported that Toys R Us was holding talks with restricted investors about raising rescue financing to pay off the debt maturing in 2018, but at the same time, was also trying to line up a debtor in possession financing. DIP financing, which grants lenders special rights, is used to fund a company during bankruptcy proceedings. This was a strong indication of what would happen next. Today, Bloomberg reported that JP Morgan Chase, Barclays, Goldman Sachs, and Wells Fargo are said to be vying to provide DIP financing for Toys R Us. The size of the DIP loan could reach $3 billion. A person with knowledge of the discussions told Bloomberg, this makes Toys R Us the next casualty in the brick and mortar retail meltdown. And like so many bankruptcies involving brick and mortar retailers, it too, again, is owned by private equity firms. In 2005, during the leveraged buyout boom, private equity firms Kohlberg, Gravis Roberts, Ornado Realty Trust, and Bain Capital Partners acquired the publicly traded shares of Toys R Us for $6.6 billion in a leveraged buyout. The firms funded the acquisition in large part by loading up the company with billions of debt and stripping out billions of cash. Here's how that turned out in the billions involved. Read, brick and mortar meltdown. Toys R Us hires bankruptcy law firm. Again, that's a link to their other article. 62 comments. Wolf Street. Years in the future, this story will make an undergraduate course at the Ivy Leagues. How to Strip a Company 101. Those who go for a finance career better ace this class. That way they can help make America great again. I like that comment. Again, this is strategy. And once again, Federal Reserve, near 0% interest rate. It's like handing out free money. So these companies, these private equity firms, load the boat on debt. We got great credit. Load us up with billions. We're going to use those billions to load up and buy out these, well, through their shares, whatever, buy up these companies. They'll be in debt. They'll default. We may end up defaulting. We both go have bankruptcy lunch together. Chapter 11, we file together. Rinse and repeat. We had all this free money. We got over indebted. The banks lent it to us. We can't afford to pay now. Chapter 11. So you're not going Chapter 7. You're going Chapter 11. Restructuring. You get to wipe off all the debt and start over. Now, you and I normally aren't so lucky when it comes to, I mean, yeah, we can file for bankruptcy, but we're not in the tune to, being, somewhere in the billions of dollars in debt. Again, this is a strategic move. This is a strategic move that what they did. And it's at the worst possible time. Retail meltdown. Toys R Us. Oh, that's retail too, but it's just pure toys. Meltdown. Auto apocalypse. Student loan debt apocalypse. Ever increasing massively. The delinquencies breaking records. Credit card debt again back to 2005, 6, 7 levels before they were all wiped out because a whole lot of people went and filed bankruptcy. And you can see the chart way down, way down credit card debt. And then it started building right back up. And there it is, roller coaster time. Oh, back at the top again. 2017. I can't wait to see if something's going to happen September 20th as you're reading this. 3 days. 3 days of September 23. 23rd. What's going to happen? Is anything going to happen? Is nothing going to happen? Will a crash finally start to happen? Will it not happen? Is what Lindsey Williams said going to be right? The guy who's been telling him these things lately has not had a very good track record. Maybe he'll be right this time. Maybe he won't. Who the hell knows? But damn it, we're only days away. So I cannot wait. And could you imagine, you're seeing this video today. I am closing on the house today. I wired, some money out of the savings account. Thank you, cryptos. As the down payment, they said the day before we closed, wired in, here's the amount. Boom, got it. Went and wired it. It's a done deal. It is solid. Nothing can stop this now. We are signing, but you're going to see this today. And this afternoon, we will be signing. And I will be pleased to announce later in the day, guys, breaking news. Not so much, but kind of. We own the flipping house. I can do what I want. I can start on this room. I can get the, I got a JSM4 subscriber who's a kind of a carpenter, repairman, handyman. That's like, man, I'll give you a real good deal on doing that room and stuff for you. You'll just pay me such and such every day. I'll have a breakout list, bust out list, and or breakout list and bust it out. And I'm thinking about doing it. But stupid generators on my mind. RV generator with RV with a generator, whole house generator, propane, 400-gallon tank. RV generator, you could take it out of town, you can get out of Dodge if you need to, but then it sits on your property, this giant 30-something foot, whatever thing in my yard. Every time I move it, I'm probably going to leave some big marks in it, ruts in the yard. Well, I may have to put some concrete down to meet up with the rest of the concrete. All these damn decisions. And I kept thinking, RV seems to be the best choice. It really does. But I might just stick around and wait for a fire sale good of a, kind of a deal. And everyone's like, get a diesel pusher. That's definitely the one you want. And I agree. But they are quite a bit, $10,000 to $15,000. But again, oh, hey kids, you want Papa to, Papa Snip 4, take a little vacation this week? 4-day vacation? What do you want? 4-day? Friday, Saturday, Sunday, Monday? Okay. Work? Need a couple days off coming up in the next couple weeks. And we go, quote unquote, camping city folk, J-Snip 4 and family style. Which is, I'm not going to be out in a damn tent, hard ground, sticking me in the damn back, little pebbles, whatever. It's hot outside, no. I'm in Florida. No. Take my sorry butt inside that RV. Next day, cook inside the RV, step outside, do the little camping thing outside. At night, hang out, little bonfire action. Y'all done? Let's go inside, turn the damn AC on, go to take a little nap, go to bed. That's my version of camping, okay? At least in Florida, where it's kind of hot like a lot of the time. Now, some of these other states, you can go camping and need a freaking blanket. Get a little chilly at night, that's kind of cool too. But again, in those other states, there might be bears and freaking big cats and, scratch right through your damn tent. No thanks. Let me go in my armored car, so to speak. Well, RV. But it would be nice, hey, let's get out. We're going to leave the state of Florida. Let's go take a little vacation. Ask some of my peeps, hey, we're going to such and such state. Any of my peeps over there? Hey, we'll stop by and say hi on the way. You know what I'm saying? That'd be kind of cool. But again, RV makes the most sense, I think, to me. But I don't, 8, 9, 10, whatever thousand is still, that's still money. That's not small money. That's not small money to me. Do I want to do that right now? I want to get this room finished off. I want to do a couple other things. I want to get that little fish farm thing going here, the aquaponics. Having said that, I might be able to do all of them. But you know, I don't want to blow through a bunch of cash and whatever. And I mean, I still got, you know, crypto stuff I can unload, but I don't want to unload them this year so that my tax owed coming up is even greater. No thanks. I'll wait till January to unload some cryptos if I need to, that kind of thing. But yeah, I just got, you know, all these ideas and stuff, and I want to get busy. So we'll see. Toys R Us, you know, who's next? JC Penney, Sears. How, you know, Walking Dead Men. How long are these things, The Walking Dead Men? Seriously. JC Penney and Sears. I hate to say, you know, these are names from a long time ago. You know those names. But for goodness sakes, enough already. File Chapter 11. Do something. Let's get this over with. You know, maybe a PE firm came in and did the same to you guys. Just have them fill you chock full of debt, restructure, and start over. But again, how the hell is JC Penney? JC Penney, are you going to compete with Amazon and Walmart? Look, it was a good run. You had that space forever. It's time to pass the torch. Sears, Craftsman tools. Not junky tools, but not the best tools either. They're not Snap-on or, you know, Mac tools or anything. But they're still decent. Lifetime warranty, great. Which would make me say, well, what happens if Sears goes under? All the Craftsman tools that I've got, something breaks, who do I take it to? Is Craftsman going to go a different way, or what? How's that going to work? Good news is I've only had to replace a couple things throughout like 20 years of Craftsman, so that's good. Anyways, done chatting. Take care.